I've spent nearly 30 years helping people buy homes. New construction, existing homes, first-time buyers, move-up buyers, I've seen it all. And in that time, I still see first-time buyers make the same mistakes over and over again. Some of them are annoying, some of them are expensive, and a few of them, they'll cost you the house entirely. Today, I'm going to walk you through the biggest first-time homebuyer mistakes I've seen in my career, and more importantly, how to avoid every single one of them. Welcome home. Let's unlock this. Before we jump in, I want you to know something about this channel. I'm not here to sell you a house. I'm not trying to be your realtor. I've spent nearly 30 years in the industry, and I've created this channel to share what I've learned, not just about buying a home, but about owning one, maintaining it, improving it, and building real wealth through it. This is a resource, plain and simple. Mistake number one, and this is the one I have seen the most, is having unrealistic expectations about what your monthly payment is actually going to be. I get people walking into my communities all the time saying they want a brand new home for under $2,000 a month. And look, I get it. That sounds like a reasonable number. But in Maryland, and honestly in most states right now, that's nearly impossible for new construction. Here's what people don't understand. When I say your monthly payment, I'm not just talking about the loan amount. I'm talking about PITI, which is principal, interest, taxes, and insurance. And if there's an HOA, add that on top. That's your real number. So that home you thought was going to be about $2,000 a month, once you factor in property taxes, homeowners insurance, and HOA dues, you're looking at closer to $3,000, maybe $3,500, maybe more. The fix is simple. Before you start shopping, sit down with a lender and get pre-qualified. Not just for a loan amount. Ask them to break down your actual estimated monthly payment with everything included. Taxes, insurance, HOA, all of it. Know your real number before you fall in love with a house you can't afford. I will say this though, it all depends on where you're going to be buying to actually get a true number. So if you know the specific part of a town that you want to buy, then you can tell the lender that, and that will help them get a more accurate tax representation for you. If the community has an HOA, if you can do some research to find out what that current HOA is there, you can also tell your lender so they can also put that in to the cost for you as well. Homeowners insurance policy, that's where you actually have a lot of control. You get to shop for that yourself, even with new construction, and it's going to typically be a little cheaper actually on a new home than it is on an older home. But other things that go into play with that, you're talking about, does the home have a security system? Does it have fire sprinklers integrated into the home? Things like that. Mistake number two, and this one breaks my heart every time I see it, is buying a car before you close on your house. I've had buyers who were approved, picked their home, signed the contract, everything was moving along perfectly. And then they went and bought their dream car. And I get it. You're excited about moving into your new home. You want a nice new car in that driveway. But here's what happens sometimes. When you go to a car dealership, they don't just send you a loan application to one bank. They send it to 10, sometimes even more banks. Every single one of those is a hard credit inquiry. And when your credit report lights up with 10 or more inquiries overnight, your score drops. And sometimes it's significant. But that's not even the worst part. Now you've got a brand new car payment, $400, $500, maybe $600 a month or more. And that goes straight into your debt to income ratio, your DTI. That ratio is one of the most important numbers your mortgage lender looks at. And there are legal limits on what it can be depending on your loan type. So now your credit score is lower, your DTI is higher, and the loan you were approved for, it might not exist anymore. I've seen people lose their homes over this. It's real. The car can wait. Close on your house first. Mistake number three is right along the same lines. Furniture shopping before closing. You're excited about the new house. You're already picturing the living room set, the dining room table, the bedroom furniture, and the furniture salesperson says, "Don't worry, it's just a soft credit pull. It won't affect anything." That is not always true. And even if it is a soft pull, if you open up a new line of credit, a store card, for example, a financing plan, anything, that is new debt and your lender is going to see it. I've seen a buyer lose their home because of a furniture purchase. It really happened. They were right at the edge of their DTI limit, opened a furniture account, and it pushed them right over. Deal fell apart. The rule is simple. Don't buy anything on credit until you have the keys in your hand. Nothing. Not a car, not furniture, not appliances, not even a new credit card. If you can't pay cash for it, it waits until after closing. Mistake number 4, walking into the home buying process without someone in your corner. Here's something a lot of first-time home buyers don't realize. When you walk into a builder's sales office, the person sitting behind that desk works for the builder, not you. And in many states, including Maryland and Indiana, where I've worked, you don't even have to be a licensed real estate agent to sell new homes. You can be trained by the builder to be a salesperson. That's it. Now, I'm not knocking those salespeople. That's their job. But their job is to sell you a house. Their job is not to walk you through the lending process, explain your DTI, protect you from making financial mistakes, or make sure you understand everything you're signing. So whether it's a realtor, a trusted advisor, or someone with real experience in the industry, have someone who's looking out for your interests, especially if you're a first-time buyer. The stuff you don't know can absolutely hurt you. Mistake number 5 is one that no one talks about: not understanding the trade-offs of down payment assistance programs. Most first-time buyers don't have money for a down payment. I get it. And in every state I've worked in, there's some kind of zero down or down payment assistance program available. That sounds amazing, right? Free money to buy a house. But here's what they don't tell you in the brochure. In most cases, the trade-off for that assistance is a higher interest rate. And I'm not talking about a quarter point. I'm talking about a full percentage point above market rate in some cases. On a $400,000 home, that difference can cost you hundreds of dollars more per month. And some programs claw back provisions. For example, one state program I'm familiar with requires you to stay in the home for 5 years. If you sell or refinance before the 5-year period is up, you have to pay that down payment money back, every dollar of it. Now, life happens. Job changes, relocations, family situations. A lot of people don't make it in 5 years. And now they're writing a check back to the state on top of everything else. Down payment assistance can be a great tool for the right buyer. But go in with your eyes open, ask your lender to show you 2 scenarios, one with the assistance and one without. Compare the monthly payments and the total interest over the life of the loan and any restrictions. Then make an informed decision, one that's best for you and your family. Mistake number 6, changing jobs or going self-employed during the home buying process. Now, if you're a W-2 employee and you switch to another W-2 job in the same field, like a nurse going from one hospital to another, that's usually not a problem. I still recommend telling your lender though, but it's usually typically fine. But here's where it goes sideways. I've had buyers say, you know what, Justin, I'm tired of working for somebody else. I'm going to start my own business. And I love that entrepreneurial spirit. But if you're in the middle of buying a house, that is the worst possible time to do it. When you go from W-2 to self-employed, meaning you're now a 1099 contractor, most lenders require 2 years of tax returns showing your self-employment income. You don't have that on day one. And here's the kicker. When you're self-employed, you write things off. That's smarter for taxes, but your lender doesn't use your gross income. They use your adjusted gross income, or otherwise known as AGI, which is what's left after those write-offs. So you might be making $200,000 a year, but after writing off $150,000 of that in business expenses, the lender sees $50,000. And in most markets, $50,000 in qualifying income is not going to get you a home. Your timing matters. Buy the house first, start the business after. Or keep your W-2 job and start your business, but don't change your income on that W-2 job until you have your keys to your new house. Mistake number 7, making unexplained deposits in your bank account. When you apply for a mortgage, your lender is going to ask for bank statements. And they're not just checking your balance, they're looking at every single deposit. If something doesn't match your regular paycheck, they're going to ask about it. And you're going to have to explain and document it. This is especially important in the age of side hustles. If you're driving for Uber, doing DoorDash, selling things online, that's great. But those random deposits showing up in your account are going to trigger questions, every single one of them. And transferring money between your own accounts, same problem. It creates a paper trail that looks messy to an underwriter. They see money coming and going and they want to know why. The simple rule: keep your accounts clean and stable during your home buying process. Don't move money around, don't close accounts, don't open new ones. If you absolutely have to make an unusual deposit, talk to your lender first. Let them tell you how to document it properly. Mistake number 8, co-signing a loan for someone else while you're trying to buy a home. This one comes from a place of love. Your kid needs a car to get to work. Their credit isn't great. You want to help, so you co-sign. What could go wrong? 2 things. First, even if your child is making every payment on time and everything is perfect, that car payment still shows up on your credit report as your debt. It goes against your debt to income ratio, and depending on how tight your DTI already is, that could be the difference of you getting approved or getting denied. Second, and this is the one that really hurts, what if they missed a payment or multiple payments? That goes on your credit too. Your score drops, and in some cases you don't even know it's happening until you're sitting in front of a lender and they pull your credit and there it is. If you're planning to buy a home in the next year or two, don't co-sign for anyone. It doesn't matter how much you trust them. It's not worth the risk to your homeownership goals. Before I wrap up, let me give you a few bonus tips that will keep your loan approval on track. Pay every single bill on time. Everyone. Your mortgage, your car, your credit cards, your phone bill, everything. One late payment during the process can change everything. Keep your financial records organized. Tax returns, pay stubs, bank statements, have them ready and up to date. Your lender's going to ask for them, and the faster you respond, the smoother the process goes. And the biggest one, communicate. Talk to your lender. Talk to your realtor or your sales representative before you make any financial move, no matter how small it seems. Pick up the phone and ask. It's always better to ask first than to fix a problem later. The bottom line is this. From the moment you start the home buying process until the day you get those keys in your hand, live your financial life as boring as possible. No big purchases, no new credit, no job changes, no moving money around. Just be steady, be predictable, and be patient. Your house is coming. If this video helped you, hit that subscribe button, ring the bell so you don't miss the next one, and drop a comment below. Have you ever made one of these mistakes? Or do you have a question about the home buying process? I read every single comment. And if you want the complete guide to the entire home buying journey from start to finish, my book, Your Key to Home, is available now. It covers everything we talked about today and a whole lot more. Link is in the description. I'm Justin, and this is Justin's Key to Home Life, where I help you live smarter in the home you love. I'll see you in the next one.